All right, guys, welcome to our February 7th, 2025 edition of This Week in Crypto. I will be going solo and without a camera back on screen next week. But we have a lot we will cover today regarding crypto markets and their up, down, and more down types of price action at the moment. A bit of a slide, and we've seen some noticeable shifts in trader moods, a little more arguing, a little more skepticism, a little more pessimism, and concern that the fun and the money making for most of crypto that they've enjoyed for arguably the past year and a half, maybe, is starting to come to an end. And it's all relative, right? We've seen short-term bursts of big downswings followed by substantial rebounds and then another downswing to kind of squash the optimism that was starting to trickle in. Kind of the opposite of what we saw, through October and January of this October of last year up until the inauguration, precisely January 19th/20th, depending on your time zone, when we saw that 109K all-time high. Oh, okay. Let me switch my mic. That might help. One sec. Thank you, Balrash.
So I'm on my good mic.
Let's do a little test. Do I sound okay? Okay, thank you. Anyways, so yeah, we have seen a bit of a psychological shift. Certainly a lot of retail traders jumping out, which we'll get into. But overall, what we'll talk about is kind of the sentiment, the short-term pain versus the long-term reasons to still be optimistic. We have had times on these shows where we don't say that the mid or long-term looks so optimistic, but especially with a lot of pro-crypto things coming around the corner, at least in the US, that's helping things a little bit and at least calming the storm in long-term traders' eyes. It's really kind of a matter of Bitcoin versus altcoins right now, because the Bitcoin community is still sitting tight. Yes, they dropped about 4% in market cap over the past week. And even if we switch to the past 30 days, it doesn't look nearly as bad. It's plus 4% because we just had an all-time high about 3 weeks ago. But if you look at altcoins, I mean, even in the past 30 days, it gets kind of worse and worse as you go down the mid cap to low cap rankings here. But especially in the past week, it's gotten pretty rough. I mean, you've got the official Trump coin down about 31%. Athena down 32. Staked Athena is obviously going to be the same, 32. Pepe down 32. Avalanche, another notable one, down 26%. Mantra has been a big success story, up 18%. But for the most part, yeah, you're likely seeing some subtractions to your portfolio values as of late, and we'll get into why. Short-term wise, there's been some concern, and it may not be done just yet. We can see that volume is actually up about 24%. One thing about volatile times like we're seeing right now is the fact that people tend to get more involved, and there are more polarized opinions and people having thoughts about an opportunity, whether to jump out because they're scared or to buy the dip because they've been waiting for these lower prices. But yeah, let's look at some of the specifics and get into what's been driving markets over the past week or so. And I want to start off by looking at the MVRVs, which are suddenly looking like they've jumped into some, at least short-term, opportunity/buy zones. We've got Bitcoin here with a return now. On average, all of the wallets mixed into the network, they're only, well, I should say they are officially down about 3.1%. The further below 0% these wallets are, the more likely you are buying or adding onto your position at an opportunistic rate or at a spot where historically, you're more justified than the average moment. Of course, this is very circumstantial on what's going on in the markets and what the context is, but from a pure math perspective, buying in when other addresses are down an average of 3.1% in the past 30 days, not too bad. In fact, better than average. And it gets more opportunistic when you look at altcoins, as you would imagine, because they have bled so much. Ethereum, average returns of negative 10.6%. Generally, if we see anything below about 15%, right about approximately here, that's a spot where you can really buy in at a historic opportunity zone. So Ethereum is not quite in that historic zone, but it's certainly in a better spot than average for a short-term upswing potential. And then when we look at Cardano, yeah, it's officially below it at negative 19.7%. XRP also below it at about 18%. So both of the assets, because they have dropped so harshly, if we go back here and we look at the past 30 days, we've got XRP actually up 8.6%. So that gives you an idea of how many people bought at that top when XRP was surging well over $3. So many people FOMO'd in that despite XRP being up 8.6% in the past 30 days, the average return in that same time frame is negative 18%. Pretty amazing. That really is a sign of how FOMO and irrationality can shape crypto, and kind of the reason why markets go up over time, because you still have plenty of people willing to lose money, not willing, but they lose money because of impatience, because of irrational decisions regarding when to buy, when to sell. So XRP being one of the best performers so far in 2025 and even late 2024, that kind of gave people the itch to buy some XRP tokens while it was up significantly. And they could end up still earning a substantial profit on their investments if they're patient and they wait for markets to kind of stabilize. But for the short term, yeah, there's been some regression to the mean for the number 3 market cap. And it's really caused some pain to the tune of negative 18% on average for any wallet that's been active in the past 30 days. So I think that's a really good illustration of how markets can become irrational and how, despite prices moving up and down the way they do, it can be much more extreme on a per wallet basis because of bad timing by retails in particular. Almost always it's the retails that are displaying the bad timing. And on that note, I also want to look at positivity versus negativity across social media. This has become one of my new go-to metrics. You've seen me refer to it quite a bit on social media and in videos. What we're looking at here is the daily ratio of all positive versus all negative comments according to our algorithm on social media. That includes X, Reddit, Telegram, 4chan, Bitcoin Talk, and Farcaster. And generally speaking, markets move the opposite direction of the crowd's expectations. So when you see really high spikes where there's a lot of euphoria, that's where we tend to top. This was a good example here at the end of the month, 1 week ago when we did this show. And these are examples of a bottom when you are seeing extreme negativity. Where are we right now? Well, when we dropped significantly on February 2nd, that was Sunday, we saw our 5th lowest day in the past year, not just in 2025, but last 365 days on a calendar year. So this was a good sign that people were getting so bearish that they were selling at a loss, getting rid of their coins. Whales, as we'll get to, were scooping them up. And we did see a little bit of a bounce. And then we finally got a little bit positive again yesterday. Not extremely positive, but above average. We can do some math and find the precise average of sentiment, but it's roughly right around here, just to give you an idea. And anything above it means we're seeing a slight bullish bias. Anything below is a slight bearish bias based on the average. There's always going to be more positive than negative comments toward crypto, except in extreme cases like the FTX collapse and Mt. Gox and other things that have been an absolute crisis on the crypto community. So we like to look at the average rate of positive versus negative output to give an idea of just how far people are leaning in one direction versus the usual. This was the Trump election, I should say. And this was kind of an exception because both retail and key stakeholders / whales were so excited that the price was forced to go up. Even with retails being excited, whales were still able to scoop up some of the loose coins that were going on. Perhaps there were people upset that Trump had won the election according to results. Over 40% of people didn't vote for Trump. So yeah, there were probably some people owning crypto who did not vote for Trump, who dropped their coins. Whales scooped those up and pushed up prices significantly. And then we kind of went through this collapse right here in the third week of December that caused a lot of negativity, then a little bit of volatility ever since. And so we have other things like you said. I want to look at that. Check out the trending words that are really driving markets. We've got Kanye West being involved in crypto. But yeah, USAID's being talked about a lot. Obviously, in the US, there's a lot of controversy regarding this initiative. If you haven't heard about it yet, it's essentially funding various initiatives right now, and especially the mismanagement of funds allegedly is causing a lot of controversy in crypto right now. So it's kind of having a significant impact on crypto at the moment. It's more obviously a political term, but we've seen how much politics, especially in the US, has been shaping crypto as of late. You can see how much it's suddenly being talked about here in February. So yes, it's a very, very polarizing topic, specifically in crypto at this time. You can even scroll down and see which platforms are getting the most discussion. Telegram, kind of a consistent level. Reddit is definitely rising, with yesterday being where it really peaked. X as well, peaking yesterday and still kind of getting a lot of discussion today. 4chan, Bitcoin Talk, nothing on Farcaster, interestingly. I wonder if there's some social data missing there, but regardless, you can see how much of an issue it is at the moment. And it seems to be one of the main topics that is causing the volatility that we're seeing at this time. Going back to social trends again, yeah, we've seen Bera on here for a couple days. It's a newly launched EVM compatible blockchain. Lots of discussion and promotion related to it, whether it's their marketing campaign or the users just are truly naturally discussing it because of the heavy interest. But obviously, when there are upcoming listings to two of the biggest exchanges in the world, Binance being the biggest, it's going to cause a lot of discussion. And yeah, Kanye West, his involvement in crypto, speculation about him launching a meme coin. I'm just going to say buyers beware. Some meme coins can be extremely profitable, then others like the hot coin and numerous others I won't get into. Just be careful and do your research. We don't give investment advice on these updates directly, but we do try to warn people about doing their own research, making sure that you are not getting into an asset that is there for a quick pump and dump to profit off of your greed or euphoria or your FOMO. Bear signals. Yeah, so this is a good sign, right? We want to see a lot of negative related words in the top 10 because that's an indication that the crowd is starting to turn bearish. Bear signals is trending due to its frequent mention of context and financial gains, specifically in cryptocurrency trading, suggesting it's associated with a profitable trading strategy or signal. Search for bear signals. That's not the most helpful AI explanation there. Elon Musk, obviously, always in and out of the top trending words. But yes, he's been frequently mentioned with Dogecoin, which has had an uptick in interest as well. Unemployment, payrolls, Palantir, interestingly, and Ondo. I'm seeing a lot of negative words. There's four of those 10 negative words are quite negative right now, and indicating that the crypto community has started to turn a bit sour. I also wanted to show this, also one of my current favorite charts. This is indicative of how much people are discussing. Let's make it just a little bit less frequent, or more frequent, excuse me. So this is 90 to 95K Bitcoin mentions versus 110 to 115K mentions, which, yeah, we have never seen 110 to 115K just yet. So when people mention this, as you would imagine, this is a sign that people are a bit euphoric and greedy. And when they're mentioning the 90 to 95K level, which we are not quite at yet, and last saw back on Sunday or the early hours of Monday, this is a sign that people are starting to get fearful. So as you can see, those blue spikes that happened right at the bottom, that's, of course, when we dove briefly into the 90 to 95K level. And even when we recovered, people were predicting we'd go back to it shortly. And then the red spikes, you can see happen right at these tops. And they didn't happen because we hit those prices. We've never seen 110 to 115. But when the crowd is speculating that we're going to see those prices, we can confidently say that the retail traders are getting a bit greedy and overconfident and buying in right as the whales are essentially about to dump. And it's worked to a T. I mean, even these blue spikes down here, we weren't, or I should say we were in the 90 to 95K range. But even as we were climbing, look how people were really mentioning 90 to 95K hard. Presumably because they were targeting these prices to buy back in. And then, of course, it never happened. And they stopped mentioning 90 to 95K, as you see the blue going way lower all of a sudden back in early, all the way to the third week of December. So if you're looking for counter indicators, this is one of my favorites currently. And it can always be applicable depending on what the price is. You know, if let's say in 3 months, knock on wood or fingers crossed, Bitcoin is 120K, then we can replace these red bars with, 130 to 140K prices. And when people mention those, that's a sign of greed because we're not there yet. And if they start mentioning 100 to 110, that's a sign of fear because we have passed that point and they're essentially mentioning that that's their target price. And it works like clockwork. No matter what the prices are, just go 5% below and 5% higher and plot those on a chart like this, which you could easily do myself or yourself. And you can find similar buy and sell opportunities, especially on a swing trading basis, just from plotting, the greedy and fear type of numbers. And it works for things like buy versus sell and all these other euphoric versus worrisome terms out there. All right, so that's a little bit about the crowd's take. Now let's go into some of the whales. So I've got this template, which is public, called Keys, and you can use it anytime you like to see what the 10 plus BTC wallets are looking like. And as we have consistently seen, it's looking still quite strong, especially since January 20th when we hit that all-time high. You can see how if I hold down shift, the price has gone down about 7.5%, but 10 plus BTC wallets have collectively accumulated another 11,978 Bitcoin. That's looking pretty strong. It's only about a 0.07% accumulation, but you know, when you talk about whales and sharks, which are the 10 plus BTC wallet group, that's still going to be a very large amount of Bitcoin, more than uh, any of you watching can probably dream of holding. But essentially, what we want to see is just this tier continue to climb, uh, and it's a especially good vote of confidence when it's happening while the prices are plummeting here. So we had this period of flatness. This was the concerning part, uh, happening really between Christmas and January 15th or so. But since January 15th, things have kind of resumed as normal. And normal is a good thing in the history of crypto. You want to see the 10 plus BTC wallets just continue to hoard coins that are being dropped from the retails, who are getting shaken out for political reasons or financial reasons or irrationally fearful reasons. And then we see time and time again how the rich get richer and they pump up prices using their heavy capital that they own. To compare, if we just go 0 to 10, look at how much the retails, all the way to, I guess you'd call them the dolphins, the tier holding like between 1 and 10, which is definitely a lot of money. They've collectively dropped significantly since the bull run started. This was just about precisely when we started to see prices rise, October 9th, 10th or so. So since the 9th or 10th of October of last year, just about 4 months ago, we've seen Bitcoin jump plus 57%, while the dolphins, not even the dolphins, every wallet that holds less than 10 BTC, they've collectively dropped, whoops, misclick, about 3.02% of their holdings, and about 0.54% of the entire supply. We can look at it in terms of absolute values too. I just click on this button, click on merge, and I'm highlighting every tier up to 10, hit confirm. And this yellow line will give us the exact amount that they've dropped. And they've dumped about 98,122 Bitcoin collectively in the past 4 months, while the 10 plus BTC wallets have added 152.74K. The reason those don't match, by the way, is because coins are being mined, and there are new BTC coming into existence that are being pocketed by the 10 plus BTC wallets. So the story here is large key stakeholders are not being fazed by the volatility going on right now. They are continuing to hold on to coins, add on more when opportunity, especially when there's volatility like we're seeing as of late, and doing quite well. So if you are worried that crypto is about to go on this huge retrace or see a crash, understand that the risk is mitigated or minimized by the level of confidence being shown by the powers that be that usually drive markets. So long term, things still look to be pointing in the right direction. If we look at supply and exchanges, this too is pointing to a good future for crypto, with supply and exchanges just continuing to move down over time. Interestingly, we saw a big jump. This was right at the bottom where we saw a lot of Bitcoin being moved to exchanges, but it quickly just went right back off of exchanges. And now we're sitting at just about 7.56% of supply on exchanges. If we, technically look at February 5th, that was the lowest level of Bitcoin on exchanges in terms of ratio of supply since, now we're going back 8 years. Yeah, since we're right at that point where we were resetting to before this huge upswing in late 2018. But yeah, it's just about October 2018 as the last time we saw supply and exchanges this low, and that's a pretty good sign. That was pretty much very close to where we started to see the bottom in December, January 2019. And then obviously since January 2019, to give you some perspective, yeah, Bitcoin's gone up a cool 2,335% since that point. So more good news. I want to check out funding rate for a moment, which is very important, especially during times of volatility. Look at Deribit, how it's seeing a big spike. That's what the pink line is here. A big pink spike in the negative, indicating there are a lot of people betting against Bitcoin at the moment, hoping to profit off of its downturn. Essentially, when there's a short or negative funding rate on any exchange, that means that shorts are actually paying longs on average in order to have their positions open. And that means if prices go up, liquidations on those shorts occur, and it can cause prices to go up at an extreme rate, or with rocket fuel, as many like to put it, to make prices really jump up in a hurry. So this is a good counter indicator. If you want to be buying in while there is a heavy contingency of traders betting against the price of Bitcoin, you're going against the grain, and you can profit at a better rate than usual because of others' negative funding rates that they're opening up, hoping that Bitcoin goes down. So that's Deribit, which obviously is not the largest exchange out there, but it is a good indication based on what we've seen in the past, because you can see prices went up when there were shorts here, prices bottomed out here when there were a lot of shorts going on. They bottomed out here, and you can see right after these big spikes, we saw big price rises. So if history tells us anything, we could be seeing a very similar bottom pattern forming here. Now, yes, the funding rate now isn't as extreme as it was, in the first and second week of January, or the end of December, or even this very short-term mid-December one where there were a lot of liquidations. But you want to be rooting for negative funding rates. DYDX, pretty neutral. BitMEX, let me just hide all the others so we can see them by themselves. Yeah, BitMEX is just slightly short. At least it's not neutral. You can see just in the past 8 hours, this little red spike is starting to show. So there are people betting against Bitcoin right now on average on BitMEX. And then finally, if we look at Binance, yeah, it's neutral at the moment, maybe just slightly lower than usual, because this line right here is the resting rate. So we are a little below it now, but overall still long on average. If it starts to turn red, that's a very good sign. Binance, as you would imagine, has the most influence of any of these exchanges in terms of funding rate impact. So in other words, when there's a short liquidation or many short liquidations on Binance, that's going to have a lot more impact than something like Deribit, just due to the sheer size. I also want to mention total amount of holders. This is a good counter indicator as well. You want to be rooting for the amount of holders to go down, especially in the short term, because that's an indication of FUD and retail traders really being panicked and concerned. If they're liquidating their wallets, that means that the whales and sharks are finding opportunities to pick up their coins from the wallets they're liquidating. And since February 1st, just over the past week, look at, especially between the first and third, when we were bottoming out and getting into the 92Ks, we saw a ton of liquidations, about 130,000 BTC in total. I'm sorry, 130,000 wallets that had coins that liquidated and no longer held coins. And we haven't seen a rebound yet. So currently 54.53 million BTC wallets exist that have coins in them. And that's about the lowest we've seen since going back to January 5th, about 5 weeks ago. If we zoom out, the line is obviously going up over time. That's normal. But you can see how it's really started to flatten out during the bull run, right? So right around October 11th or 12th, when the bull run started, all of a sudden, the total amount of holders have kind of capped off and actually gone down by about 58,000 total holders. That's significant when you normally see this line just continue to go up and up and up. I think this is a good sign. It's an indication that retail traders are, when looking at them at a whole, kind of non-believers in the markets. And their natural progression of going up is kind of stalling. We can even go back further, go back to 2019 to now. You can just see they continue to move up and up and up over time. There were, if we go back 6 years from today, there were 23 million total holders. Now there's 54.5 million. That's a pretty jarring statistic. And you can see how it's just started to taper off here. Now, some of you may think, oh no, that means that, we're getting further and further away from mass adoption. We need this line to continue to go up over time. Yeah, from a very long-term perspective, that's true. You do still want to see more and more wallets that have coins exist. But from a short-term perspective, it's a very good indication that retail is dumping their coins at a healthy rate, as weird as that sounds, and siphoning them off to sharks and whales who are getting richer as a result of the doubt from the small fish out there. A few other things to look at here. Percent of total supply we haven't discussed in a while. It's actually dropped below 90% for a second time after doing so right around Christmas. So this, as you would imagine, when we're at an all-time high, that means percent of supply is at 100%. You want to kind of see it in that 75 to 90% range. Obviously, it can even go below 75 at times, like we saw back in December when the FTX collapse was showing its impact. But for the most part, being below 90% means there is room to grow, right? There are coins that have been mined that are actually in a lower price range than the moment they were mined. And when you see super low values, especially, during Black Thursday, which was the lowest we've seen in the past 6 years, that's usually a good bottom signal because coins generally become more profitable than the moment they first existed in crypto's history. So this is a very good long-term metric, in my opinion, and I like to check on this from time to time. Good to see we're below 90% again. Obviously, we need a certain amount of retrace and regression to the mean in order for the graph here to not just constantly be showing 100% or very close to it. Looking at a few on-chain and other social metrics here. If we go to the main chart, which is also publicly available, if you have your trial or your Sandbase Pro account, you can open it as well. So transaction volume, kind of neutral at the moment. We're not seeing too much in either direction. It's already on daily. So yeah, it looks like we're hovering between, 25 to 35 billion dollars per day in Bitcoin. Those are still massive numbers overall, but ideally we want to see them climb over time. If we go to the past year, this pump that happened in November was happening on the back of rising transaction volume, and that's kind of started to fall apart. Now we're still higher than we were in like the summer and spring of last year. So I consider that a good thing, but let's hope that transaction volume can start to pick up again as we get further and further into 2025. Daily active addresses kind of sitting in mid-range, again, still better than it was in the summer and middle part of last year, but not as high as it was at the tail end of November and early December when euphoria surrounding Trump's upcoming inauguration at the time was really peaking. MVRV, yeah, Bitcoin's actually it's up a little bit even since the start of this show at about negative 1.7%. The 365-day long term is still up at about 19.5%. We'd like to see that ultimately start to come down to zero or even get into the negative range. Talked about funding rates. Whale transactions is an interesting one. So this is the amount of $1 million or more transactions happening per day. And we peaked here December 4th-ish or so. And very shortly after that, we started to retrace. Whale transactions still look like they're higher than usual, which makes sense when we have volatile conditions like we have been. Whales are finding more opportunities to make moves. So it's still up, but it's not at a degree where we really need to be monitoring things on a hour-to-hour basis. Also note this chart, which is showing how much the 100 to 1K BTC wallets are growing in number. Especially since February started, we've seen 151 more, or just about 1% more 100 to 1K BTC wallets exist. That's pretty significant because we were starting to stall a little bit. I'd argue that this is the most important tier in terms of price alpha, and they've been climbing over the past week. And I like to see that. We already saw in terms of the overall collective amount of Bitcoin held by all the 10 plus BTC wallets total. They're moving up, and it looks like it's being driven by the 100 to 1K tier. The ratio of daily on-chain transaction volume and profit to loss is actually pretty low, which is good. You want to see, if I mark the 1.0 line, so you want to see anything below this line happening pretty consistently because it means lots of people are transacting Bitcoin at a loss, which means that you have more room to transact into profit. It's a zero-sum game. When you see tons of profit, that means there's less room for you to make profitable trades and add on to your position if you're hoping to make money from your longs. So in short, throughout February so far, 5 of the 7 days have been in the negative range where there are more transactions happening at a loss on a daily basis than transactions happening in profit. Let's hope that trend continues a little longer because that's going to justify a nice little rebound coming up. Also, we didn't update this for the past couple weeks, but I can say that the mean dollar invested age line is continuing to look very good from a mid to long-term perspective. The average age of coins in Bitcoin's network is continuing to get younger. We look at since right around when the bull rally started, 1st/2nd week of October, the average age was about 525 days, meaning coins were starting to get a little bit stagnant. We saw this upswing from July to October, and then all of a sudden things really moved down and haven't really stopped. They slowed a little bit in January, but this little downswing here, when there was a lot of volatility at the beginning of February, that was a good sign. And we're currently sitting at about 414 days on average that Bitcoin is sitting in wallets. The reason this is important is because stagnation is what causes prices to start stagnating themselves and drying up and not moving up the way traders are hoping. When it moves down, that means that older coins are healthily moving out of those wallets and back into main circulation where they can be traded, network activity can rise, excuse me, and ultimately allow for prices and market caps to increase due to that increased circulation. So mean dollar invested age moving down is a great sign. Token age consumed is another good one where we're seeing some minor spikes right now. That is measured by multiplying the amount of coins multiplied by what the price of those coins were. So a few of those spikes usually coincide with drawdowns in the mean dollar invested age. And I like the look of this a lot. The fact that despite all this volatility, coins aren't just sitting in exchanges. It means there's a reaction to all of the up and down movement going on. And ultimately, that's going to help Bitcoin stay high and ultimately move higher, assuming this trend continues. And I'll monitor over the next couple of weeks for big anomalies in that line to update people on our socials. Plenty of profit taking. This also kind of goes hand in hand with the mean dollar invested age. A big spike we saw just 3 days ago. That was Tuesday. Plenty on the way up here. You can see that this kind of helps, especially if we're having bullish momentum throughout November. Just tons of network realized profit that was allowing prices to continue to go up and up. And we already talked about exchange flow and how supply on exchanges is moving lower and lower. That's a good sign. Less risk of a sell-off. Social volume and dominance kind of sitting in the middle at the moment. No serious spikes compared to what we saw in November. Weighted sentiment. I do still like this metric from time to time. I'm using it a bit less lately on analysis, but for the most part, it looks like we are seeing a slight bullish bias. Decent amount of discussion combined with a slight bias of positive comments compared to negative in the long term. So we'd like to see that move down just slightly if we're hoping that the retail crowd is going to move against crypto in the long run. It would really help if we start seeing some negative commentary to help signal that. Also notice RSI is below 50. For those technical traders out there, this is a long-running metric that many rely on, and anything below 50 means we're a little better than average in terms of where we are in terms of the volatility and the natural momentum of the markets. Okay, so I've gone through most of our main metrics that are worth discussing. Max, do you see any questions or requests from the crowd at this time? All good. So I'm going to close with just a few quick updates on some of the hottest altcoin networks at this time. If we go to our activity matrix, scroll all the way to the right on the leaderboard tab, we can see which coins are seeing the heaviest increase in on-chain activity compared to their normal resting rates. We have Coin98 here, Pax Gold, Bancor, Aragon. Nexo is our first one in the top 100 market caps. Ampleforth, USD coin is obviously another one in the top 100, yet it's a stable coin, so maybe not the most helpful. But it looks like Nexo is the most notable one, getting some hot activity at the moment. And on the other side of the spectrum, if we look at the coldest ones, the ones that are getting the least amount of activity compared to normal, Origin's up there. Immutable X, interestingly, seeing a very big drop-off in activity. Dogelon, interestingly, even though it's been in the news a little bit with Elon Musk, not much activity compared to normal. Yield Guild, TrueUSD, Lever, Gitcoin, Seller, Small Love Potion, and Scale. And if we go to the detailed tab and just take a look, yeah, the blue squares are starting to show up a little bit, indicating that the unbelievable hot rallies that we saw back in November and a little bit of December, they've kind of cooled off, literally. It means the active addresses on many of these networks, network growth, whale transactions, even exchange inflow and outflow, they're showing less activity than what we've been seeing, especially compared to the end of 2024. So this isn't necessarily a bearish sign. What it means is we're getting less signals that a reversal is about to take place. There are a few exceptions. So if you look at the red and orange labels here, these are the ones that were showing up on this leaderboard tab over here. So anything in red and orange like Ampleforth, Aragon, Coin98, Pax Gold, look at these as outliers where if their prices are moving down, which almost all of these have been moving down over the past 30 days, the red and orange labels are indicating assets that are more likely to suddenly turn around and potentially bounce, assuming Bitcoin can get it together and start to stabilize a little bit. But if you're looking for candidates where a dip buy might be more justified, you can check out those that are seeing increases in whale transactions, active addresses, network growth, even social dominance, age consumed, stuff like that. There's always a few opportunities out there, and mathematically, these assets in red and orange, and the ones I read on the leaderboard, are more likely to see a little bit of encouraging bounce action. So that'll about do it, guys. Thank you all for tuning in today. Overall, it does look like there's some good signs of a little bit of a reversal. We might see some encouragement today, especially with the average trading returns being below 0% for Bitcoin, and especially below 10% for a lot of altcoins out there right now. Pay attention to the insights that we're putting out. We've found some good stuff over the past week. We talked about altcoins and the centralization effect, fastest developing coins out there, which, by the way, I can give a quick update on. If we just go down here and I highlight development activity, we can see that the top 10, I don't think it's changed too much since we did our last social media update, but yeah, Internet Computer is still way up at the #1 spot, seeing over 811 notable GitHub events per day. Chainlink right behind it, Hedera, Cardano, Optimism, Starknet, Ethereum, Polkadot, Kusama, and Eigenlayer as the top 10, with Fuel just outside the top 10. So if you're looking at assets that are seeing plenty of activity, it doesn't mean these are the most bullish assets out there, but it means that if you're holding them in your portfolio, you are holding on to assets that already have a dedicated team that actually believes in its improvement and innovation, and that it'll be around in the crypto ecosystem for a long time. So if anything, do try to avoid the ones that are getting very minimal activity. And for the long term, if you're holding ones that are getting a lot of activity, they're likely to be a mainstay in the top 200 market caps and potentially rise up those rankings over time. So again, thank you all for watching. It's still going to be a volatile couple of weeks here at minimum, especially with politics having a heavy impact on crypto and all of Trump's moves, being very sensitive in crypto traders' minds right now. But be safe out there. Look for some of these signals that we're seeing right now, especially, traders starting to capitulate as a good sign where you can buy with confidence, and watch out for greed. If we do see a big bounce over the next few days, signs are pointing to a good potential of that if news doesn't suddenly put a wrench in the spokes of the tires. So with that, guys, let us know what else you're looking at. Jump into our Discord. We're always happy to chat with you. Tag @Brian if you want to talk with me a little bit about what I'm seeing and compare some charts. And we'll talk to you next week. Thank you all.